So you may have seen that yesterday, CEO Matt Furlong of GameStop issued a letter to shareholders. I want to go ahead and point out some things that stood out to me. You're more than welcome to disagree. I'm not going to talk about everything. I'm just going to go quick here, but get right into it. First thing that stood out, it's addressed to fellow stockholder, comma, not dear shareholders, fellow stockholder. Reminder, CEO himself has shares as well as other individuals operating the company, the board members, top executives, CEO, etc., right? And he's CEO, so he falls in that bucket. Next point that stood out to me is that they mentioned how there's no debt anymore, the systems have been updated, and they're in a much better position in terms of cash to debt. Beyond that, they talk about closing unprofitable stores and basically says, forfeited some of our infrastructure and explored growth opportunities, some of which materialized and some of which did not. This was an important period of foundation building and investment. I wrote down for a note on that, greatness takes time, persistence, and mistakes long way. I think that's just reality. And I think one slight mistake, or I don't want to call it a mistake, but a way the company pivoted where they did something, I was like, oh, that's really good. And obviously they saw something internally, we're like, hey, that's not really good. We're going to get rid of this. And that was the Florida Customer Care Center. It was opened in Pembroke Pines about 2 years ago-ish, something like that, maybe a little bit less. But they've actually entirely winded that down now. So as I understand it, most of their representatives are either going to be at GameStop headquarters in Texas or full-time remote. And that's in terms of just answering general customer support questions, like if you have a question about your delivery, whatever it may be. Moving on, another point here, or I want to read this sentence. Rather than stand still, we pivoted to cutting costs, optimizing inventory, and enhancing the customer experience. This was speaking on how GameStop adjusted in 2022, dealing with macro headwinds, rising interest rates, inflation. So overall, what that told me is the board and individuals running the company, such as Matt Furlong, CEO, were pivoting and watching what's happening very closely. So that's why they were loaded up with inventory before the supply chain issues began. But that's just my perspective there on that comment. Of course, you can always disagree with any of this. And then they said, we've also found efficient ways to improve shipping times, integrate online and in-store shipping experiences. And I circled experiences because I thought that's going to remain in focus. And seeing what they did in Milan, Italy, where they have an aspect of the store now that's intended to bring individuals in for the experience. And I think that just leads to more foot traffic and inevitably more sales. And then in that Milan, Italy store, keep in mind, it's 3 levels. They have like a level for streaming and essentially in-store events, a main GameStop level, how you'd kind of imagine now, and then a 3rd level that's consistent of board games, collectibles, kids items, things of that nature, which are generally higher margin items. So if you have more people coming in the door in a store with higher margin items, overall that's going to help the business over time. It may not be overnight, especially with just Milan, Italy as the first like superstore or whatever you want to call it, but I think we could see more stores like that over time. And I do want to make another video on that in the near future. But moving on here, establish a culture of increased incentivization among store leaders and tenured associates. So again, pointing to aligning management and shareholder interests because management themselves are shareholders. Where we are. GameStop produced net income of $48.2 million in the fourth quarter of 2022 compared to a loss of $147.5 million in the quarter 4 of 2021. So a lot of people are like, oh, that's not that big a deal, right? I think it's a huge deal because that's a $200 million swing in the bottom line, essentially negative $150 million to positive $50 million. That's a massive change. And that's while top line revenue was consistent. It was essentially flat, but the bottom line improved greatly. So I think they've put themselves in a better position now to scale upwards as they've restructured infrastructure. You know, they might continue to close a few more stores here and there. They even mentioned continuing to cut excess costs, including in Europe, where we have already initiated exits and partial wind downs in certain countries, such as Ireland. So another thing they closed down was the customer care center. Obviously, the logistics weren't there, something wasn't working with it. But I like the fact that the company is making adjustments as they go. Then where we're going, looking ahead, GameStop is aggressively focused on achieving profitability while still pursuing pragmatic long-term growth. I want to read that sentence again. Looking ahead, GameStop is aggressively focused on achieving profitability while still pursuing pragmatic long-term growth. What that tells me in the note I made was, we'll pursue growth, but we'll not do it at the cost of profitability. So essentially, I think they'll definitely pursue growth opportunities, but they want to ensure that they're net positive on the bottom line going forward. It's not that they've made the adjustments they have. That's just how I take that. And then they said, leveraging our strength and financial position to continue obtaining improved terms, suppliers and vendors. High interest environment, they don't have to take on debt. I know that's not exactly what that point means, but that's kind of the little note I had there. Getting full console allocations help us meet customer demand during this extended cycle. Strong inventory for loyal customers. Building a stronger presence in higher margin categories like collectibles and toys, where we have already seen pockets of growth. Hence what I said before about Milan, Italy. I think we're going to see more of that over time. But of course, time will tell. Numbers will tell. Numbers always tell the story, right? Numbers don't lie. Final sentence here. We plan to build on our momentum while prioritizing value creation and stockholders' interest. Again, we plan to build on our momentum while prioritizing value creation. I'm Croatian, so my bad for butchering that there. Value creation and stockholders' interest. Long-term shareholder values in focus. That's what that tells me. They're not going to just start issuing dividends tomorrow, maybe necessarily buy back stock tomorrow, but I think all that stuff is coming down the line. And those are just some of the ways they can drive shareholder growth. I think potentially acquisitions, more partnerships down the line. And it feels very slow sometimes, I would say, just from my personal perspective. Of course, I never give financial advice in any of my videos. I'm only here to share what I think and just document this journey of being a GameStop shareholder. But my perspective here is that they're just chugging along, slow and steady. There's no need to rush. There is no rush. Anybody that was in this for a quick swing, quick this, quick that trade, I really don't think anybody's really trading GameStop that regularly at this point, or anybody is holding it. It's like, oh, the first little spike, I'm about to sell out. I just don't think that's the case. But thank you so much for watching. Hope you have a good day.